During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results. We'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. And the earnings per share growth is up by 9%. Now let's look at the free cash flow, which is the money a business can generate from its operations. Free cash flow growth is only up by 2%. Then we come to the next pillar, which is revenue. And this tells us how good the company is at generating income before deducting expenses. Revenue growth is up by 7%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. And book value growth is also up by 7%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. Return on invested capital and return on equity are looking incredible at 30% and 45%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. Debt would be able to be paid off with their free cash flow in just over 1 year. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. And their gross margin is an incredible 82%. Next we come to the operating profit margin. This tells us how much profit a company makes on $1 of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. And their operating profit margin is equally impressive at 64%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. And their free cash flow yield is good at 3.28%. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. Surprisingly, this has only grown by 6%. Ben Miller believes earnings growth is the biggest indicator to a company's stock price, and the average over the last 5 years is 9%. I've included a link if you want to check out the investors page and see the annual report. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. There are currently 10 super investors who own this company, and between them they invested $1.6 billion in Visa in Q1 of 2024. If we look back at Chuck Acker's previous sales and purchases, we can see he's both bought and sold shares in Visa in the past few years, and he's increased his stake in Q1 of 2024 by 87%. He has $1.72 billion invested in Visa, and this makes up 7.34% of his overall portfolio. However, 11 other super investors have sold shares totaling $617 million in Q1 of 2024. Ken Griffin has previously bought Visa shares, but in Q1 of 2024, he sold 691,000 shares. He still has $101 million invested in Visa, but this only makes up 0.11% of his overall portfolio. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that from 2014, Visa have been steadily growing year on year up until 2022, but have now recovered after that dip and continue to grow. On average, the analysts believe that the price target should be about $303, and some believe it can go as high as $330. Analyst reports suggest that Visa is a little undervalued at the moment, and the overall consensus that Visa is a buy. Collectively, the analysts believe that the company will grow between 12% and 23% over the next few years. So I'm going to use the current earnings per share of 8.02 as my starting point when creating a valuation. Based on a combination of past growth and future analyst predictions, I'm going to estimate the earnings per share growth to be 14%. I'm going to give Visa a PE of 30, and after that I'm going to project these numbers forward by 10 years. We then need to include a 15% return, and this gives me an estimated future stock price of $892 per share for its future share price. And then we work out the current value that Phil Town calls a sticker price, which is about $220. Then we apply a margin of safety, and at 25% it gives me a buy price of $165. But to be honest, it would take a significant event to get anywhere near that price again. Realistically, I believe the lowest it could fall would be about the 2022 price of $230, which is still $10 more than our sticker price. If you found this video useful, click on the link to check out my last stock analysis. The return we would receive if we bought at our price target of $230 and sold in 10 years' time, our estimated future stock price of $892 would be 288%, but this is dependent on our assumptions for the company being correct. The current annual dividend is $1.94 and the dividend growth is about 8%. The payout ratio is 22%, and this is within our acceptable level between 20 and 50%. According to Morningstar, Visa are believed to have a wide economic moat. Let's start with the bull case. Visa benefit from a strong network effect and market dominance which they share with MasterCard. With the world switching from cash to digital payments, this continues to ensure their year-on-year growth. In addition, they continue to reinvest in new technologies such as contactless payments and blockchain. This innovation puts Visa in a very strong position as they continue to adapt to market conditions. Now let's look at the bear case. Visa is vulnerable to any potential payment regulation changes, and the rise of fintech companies and cryptocurrencies represent a competitive threat that could erode Visa's market share or disrupt their business model. In addition, Visa's revenue is tied to consumer spending. Economic downturns or recessions could lead to reduced transactions, impacting on their financial performance. If you've enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now we'll summarise what we found out about the company. When reviewing the key pillars, Visa scored 8 out of 12, and under ownership 10 super investors have bought in the last few quarters and 11 have sold shares. The average share price is in an upward trend but is currently down from its all-time high. Analysts are indicating that Visa is a buy, and they're predicting they will grow between 12 and 23%. Using the earnings per share growth model, my personal buy price would be $230 or less. If you click on the link above, you can find out about my personal portfolio. According to Morningstar, they have a wide moat, and my final overall rating is 4.5 stars out of 6, and I've given this a category A star rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comment section to help me develop the content I am creating. And don't forget to like and subscribe.